You know what's absolutely wild? While everyone's freaking out about gold hitting new record highs and crypto bouncing around like a pinball machine, there's something happening in the silver market right now that almost nobody's talking about. And I'm not being dramatic when I say this could be the most important financial trap set in the precious metals market in decades. We're talking about a $52,000 trap that's being carefully constructed, and if you don't understand what's really going on, you could end up on the wrong side of one of the biggest wealth transfers we'll see in our lifetime. So stick with me for the next 20 minutes because what I'm about to reveal is going to completely change how you think about silver. And more importantly, it might just save you from making a catastrophic financial mistake or position you to capitalize on an opportunity that most people won't see until it's too late. Let me paint you a picture of what's happening right now. Silver is trading at around $25 to $30 an ounce, depending on when you're watching this. Now, on the surface, that might seem reasonable, maybe even cheap compared to historical ratios with gold. The financial media is pumping out article after article about how silver is the investment of the decade, how it's going to explode to $100, $200, even $500 an ounce, according to some of the more enthusiastic promoters out there. YouTube is flooded with videos showing shiny silver bars and coins, telling you that you need to buy now before it's too late, that the banks are manipulating the price downward, and a massive squeeze is coming any day now. Social media is absolutely buzzing with silver bugs talking about how they're backing up the truck and loading up on as much physical silver as they possibly can. But here's where things get interesting, and this is where that $52,000 figure comes into play. Let me break down exactly what this trap is and how it works. Imagine you're someone who's concerned about inflation, and you should be because inflation has been eating away at purchasing power like crazy over the past few years. You're worried about the banking system, you've seen what happened with Silicon Valley Bank and other regional banks. You're concerned about government debt spiraling out of control. You're watching the Federal Reserve's balance sheet and monetary policy with growing anxiety. All of these concerns are completely valid, by the way. These are real issues that any intelligent person should be thinking about. So what do? Well, the precious metals industry has an answer for you, and it sounds pretty good on the surface. They tell you to buy silver, and not just a little bit. They encourage you to make it a significant portion of your portfolio. Some promoters are suggesting people put 20, 30, even 50% of their net worth into physical silver. Now, here's where the math gets really interesting and where that $52,000 trap starts to become clear. Let's say you're an average person with some savings. Maybe you've got $100,000 that you've worked hard to accumulate over the years. Following the advice of these silver promoters, you decide to allocate 50% of that into physical silver. That's $50,000. At current prices, $50,000 will buy you somewhere between 1,500 and 2,000 ounces of silver, depending on premiums, which have been absolutely insane lately. But wait, it gets better. Or should I say worse? You're not just paying spot price for silver. Oh no. When you buy physical silver, especially coins and smaller bars, you're paying massive premiums over spot price. We're talking premiums of anywhere from 15 to 30%, sometimes even more for popular coins like American Silver Eagles. So, your $50,000 investment, you're actually getting maybe $40,000 to $43,000 worth of silver at spot price, and the rest is going to dealers, mints, and middlemen. That's already a loss of $7,000 to $10,000 right out of the gate before the silver market even moves. But the trap goes deeper than just premiums. Let's talk about storage and security. You've now got a substantial pile of silver sitting somewhere. If you keep it at home, you're worried about theft. If someone breaks in, your entire investment could disappear in minutes. So you consider a safe, which costs anywhere from $500 to several $1,000s depending on the quality and size. Or maybe you go with a safe deposit box, which costs a few $100s a year. Or perhaps you use a private storage facility that specializes in precious metals, which can run you anywhere from a few hundred to over $1,000 per year, depending on how much you're storing. These costs add up, and they're eating into your potential returns every single year. Now here's where the psychology of the trap really kicks in. You've made this massive investment in silver. You're emotionally invested now. You start watching the silver price every single day. You join online communities of silver enthusiasts who reinforce your decision and share increasingly extreme predictions about where silver is headed. You watch YouTube videos that confirm your bias. You read articles about silver shortages and supply constraints. You become convinced that you've made the smartest financial decision of your life and that everyone else just doesn't get it yet. This is exactly what they want. This is the trap working exactly as designed. Meanwhile, what's actually happening in the silver market? This is crucial to understand. Yes, silver has industrial uses. Yes, demand is growing in certain sectors like solar panels and electric vehicles. Yes, the supply situation has some constraints. All of that is true. But here's what the promoters aren't telling you. The silver market is relatively small compared to other markets. which makes it susceptible to price manipulation and extreme volatility. When I say small, I mean the entire global silver market is tiny compared to the gold market and absolutely microscopic compared to major financial markets. This means that large players, and we're talking about major banks and institutions, can move the silver price with relatively modest positions. Here's the really devious part of the trap. While retail investors, regular people like you and me, are being encouraged to buy and hold physical silver, the smart money, the institutional players, they're playing a completely different game. They're trading silver futures and options. They're taking both long and short positions. They're hedging. They're using leverage. They're making money whether silver goes up or down. And most importantly, they can exit their positions in microseconds if they need to. You, on the other hand, with your stack of physical silver, you can't do that. If you need to sell, you've got to find a buyer. You've got to ship or transport your silver. You've got to accept whatever bid price you're offered, which, by the way, is going to be below spot price, because dealers need to make their profit when they buy from you too. Let me tell you what that $52,000 trap really looks like in practice. You put $50,000 into silver. After premiums, you've really got about $43,000 of actual silver value. A year goes by, and let's say silver doesn't do much. Maybe it goes up a little, maybe it goes down a little. You've paid maybe $500 to $1,000 in storage costs. You've had that capital tied up, unable to use it for anything else. Now something happens in your life, an emergency, an opportunity, whatever it might be, and you need to liquidate some of your silver. You contact a dealer to sell. They offer you spot price minus a percentage, usually somewhere between 5 to 15% below spot for most forms of physical silver. So even if the spot price of silver hasn't moved at all, you're looking at being down somewhere around 15 to 20% or more on your investment when you account for the buy premiums, the sell discount, and the storage costs. But wait, there's more to this trap. Let's talk about the opportunity cost. Opportunity cost is one of the most important concepts in investing that most people completely ignore. That $50,000 you put into silver, what else could you have done with it? Over the past few years, despite all the volatility and concerns about the economy, the stock market has had some incredible runs. Quality dividend-paying stocks have been generating returns and paying dividends. Real estate, despite high interest rates, has remained relatively strong in many markets. Even just parking money and treasury bills has been yielding 4 to 5% risk-free over the past year. Your silver? It's just sitting there, generating no income, no dividends, no interest, nothing. It's a completely dead asset from a cash flow perspective. Now, I know what some of you are thinking. You're thinking, but what about the coming silver squeeze? What about the manipulation that's going to end? What about silver going to $100 or more? Let me address this directly because this is a critical part of the trap. Yes, silver could go up substantially. I'm not saying it won't. What I'm saying is that the way you're being encouraged to invest in silver is designed to benefit everyone except you. Think about it logically. If silver were truly on the verge of this massive breakout that would make everyone rich, why would dealers be so eager to sell it to you? Why would they be spending millions on advertising and promotion to convince you to buy? Wouldn't they just buy it all themselves and wait for the windfall? The reality is that the precious metals industry is just that, an industry. It's a business, and like any business, it needs customers. Dealers make money on the spread between what they buy for and what they sell for. Mints make money producing coins and bars. Storage facilities make money storing your metals. YouTube channels make money on ads when they promote silver. Affiliate marketers make commissions when you buy through their links. Everyone in the chain is making money, and they're making it whether silver goes up, down, or sideways. The only person who's actually taking the full market risk with no guaranteed profit is you, the retail buyer. Let me share something that might shock you. Do you know who some of the biggest players are on the short side of silver? Major banks and financial institutions. Now, why would sophisticated institutions with armies of analysts and unlimited research budgets be betting against silver if it's such a sure thing? Maybe, just maybe, they know something that the retail silver promoters aren't telling you. Maybe they understand that the fundamental case for silver, while not terrible, isn't nearly as compelling as it's being made out to be. Maybe they recognize that the retail enthusiasm for silver creates trading opportunities for them to profit from the volatility. Here's another angle of this trap that's particularly insidious: taxes. When you eventually sell your physical silver at a profit, and let's assume you do make a profit, congratulations. The IRS considers that a collectible. Collectibles are taxed at a higher rate than long-term capital gains on stocks. We're talking up to 28% federal tax on your gains from selling physical precious metals versus 15 to 20% for long-term stock gains for most people. So even when you win with silver, you're losing more to taxes than you would with other investments. Did the silver promoters mention that? Probably not. Now let's talk about liquidity, which is absolutely crucial and often completely glossed over. Liquidity means how quickly and easily you can convert your investment into cash without taking a significant loss. Stocks, highly liquid. You can sell in seconds during market hours and have cash in your account in a couple of days. Bonds, pretty liquid, especially treasuries. Real estate, not very liquid, but everyone understands that going in. Silver, here's where it gets tricky. In theory, silver should be fairly liquid. In practice, especially with physical silver, it's much more complicated. You need to find a buyer, negotiate a price, arrange for transfer or shipping if it's not a local transaction, and wait for payment. If you need money quickly, you're at the mercy of whoever's willing to buy, and they know you're in a hurry, which means you're going to get a worse price. I want to be clear about something because I don't want you to misunderstand what I'm saying. I'm not telling you that silver is a bad asset or that you should never own any. Silver has a role to play in a diversified portfolio for some people. What I'm warning you about is the trap of over-allocating to physical silver based on promotional hype and fear-based marketing. The $52,000 trap, or whatever amount applies to your situation, is about putting too much of your wealth into an asset that has high transaction costs, ongoing storage costs, no income generation, unfavorable tax treatment, and liquidity challenges, all while being told that you're making the smartest decision possible. So what's the smart play here? How do you avoid this trap while still potentially benefiting from silver if it does appreciate? First, if you're going to own silver, keep it as a small percentage of your overall portfolio. Financial advisors who aren't trying to sell you silver typically recommend no more than 5 to 10% of your portfolio in all precious metals combined, not just silver. That's a reasonable hedge against currency debasement and financial instability without putting yourself at undue risk. Second, consider the form in which you own silver. Physical silver makes sense for a small amount that you keep for true emergency purposes, but for larger allocations, consider silver ETFs or mining stocks. Yes, I know the physical silver advocates will say that's not real silver, that it's paper silver, that it won't protect you in a crisis. But here's the thing, ETFs and mining stocks are much more liquid, have lower transaction costs, don't require storage, and can be sold instantly if needed. For most people in most scenarios, these advantages far outweigh the theoretical benefits of physical possession. Third, and this is critical, don't let precious metals become an emotional investment. The trap isn't just financial, it's psychological. When you're deep in the silver community, consuming content that constantly reinforces the same narrative, you lose objectivity. You start making decisions based on hope and fear rather than rational analysis. You ignore warning signs and red flags because they don't fit the narrative you've bought into. This is exactly how people end up holding investments far too long or continuing to buy as prices fall, convinced that it's just manipulation and that vindication is right around the corner. Fourth, always question who benefits from the advice you're receiving. When someone is telling you to buy silver, ask yourself what they get out of it. Are they selling silver? Do they make money from affiliate commissions? Does their YouTube channel grow when they promote precious metals? Are they selling courses or newsletters about silver investing? If the answer to any of these is yes, you need to take their advice with a massive grain of salt. This doesn't mean they're necessarily wrong, but it does mean their incentives aren't perfectly aligned with yours. Fifth, understand the difference between investing and speculating. Buying physical silver at high premiums hoping for a massive price increase is speculating, not investing. There's nothing wrong with speculation if you understand that's what you're doing and you're only using money you can afford to lose. But when you're putting serious money, retirement savings, emergency funds, or a significant portion of your net worth into something based on speculation, that's when you're walking into the trap. Let me give you a real-world scenario to illustrate how this trap plays out. I know someone who got caught up in the silver hype a few years back. He put about $60,000 into physical silver, buying mostly coins. This was a substantial portion of his savings. He paid huge premiums, probably an average of 25% over spot at the time, because he was buying during a shortage. He was convinced silver was going to $100 within a year or two. Well, silver went up for a bit, then came back down, then went up again, then back down. Meanwhile, he's sitting on this pile of silver paying storage fees, unable to use that capital for anything else. An incredible real estate opportunity came up in his area, a property that was undervalued and would have generated solid rental income. He couldn't take advantage of it because his money was tied up in silver. Fast forward a few years, he finally sells most of his silver. After accounting for the buy premiums, sell discounts, storage costs, and opportunity cost, he basically broke even in dollar terms, which means he actually lost money in real terms because of inflation. Meanwhile, that real estate opportunity he missed, it appreciated significantly and has been generating positive cash flow the whole time. That's the trap in action. Here's what the precious metals industry doesn't want you to understand. The massive marketing push to get retail investors to buy physical silver serves their interests, not necessarily yours. They make their profit on the transaction, on the premium, on the storage, on the eventual sale. They make money whether you make money or not. In fact, in many cases, they make more money when you lose money, because high turnover means more transactions, means more fees and commissions. When you're being told to buy and hold, they're actually hoping you'll eventually panic sell or need money and have to liquidate at a loss so they can buy that silver back at a lower price and sell it to the next wave of enthusiastic buyers. Think about the marketing too. It's all based on fear and greed, the two most powerful emotions when it comes to money. Fear of economic collapse, fear of currency devaluation, fear of being left behind, greed from the promise of massive returns, life-changing wealth, being smarter than everyone else. This is manipulation, plain and simple. It's the same psychological tactics used by every financial scheme throughout history. That doesn't mean silver is a scam, but it does mean you need to be very careful about separating legitimate investment analysis from emotional manipulation designed to get you to buy. So what should you do instead? Build a genuinely diversified portfolio. Yes, that might include some precious metals, but it should also include stocks, bonds, real estate or REITs, cash or cash equivalents, and maybe some alternative investments depending on your sophistication and risk tolerance. Within your precious metals allocation, if you choose to have one, split it between physical for emergencies and more liquid forms for potential appreciation. Focus on generating income and building real wealth through assets that produce cash flow. A rental property produces rent. Dividend stocks produce dividends. Bonds produce interest. These are assets that work for you. Physical silver just sits there looking shiny. Most importantly, educate yourself about all aspects of investing, not just the parts that confirm what you want to believe. Read books about market history and market crashes. Study how different assets perform in different economic conditions. Learn about portfolio theory and risk management. Understand tax implications of different investments. The more you know, the harder it is for anyone to trap you with slick marketing and fear-mongering. I want to emphasize this because it's crucial. The trap isn't that silver is going to zero or that it's a worthless asset. The trap is the overallocation, the high costs, the illiquidity, the opportunity cost, and the psychological manipulation that keeps you holding even when it might make sense to rebalance or exit. The trap is putting yourself in a position where you're dependent on silver doing something extraordinary just to break even after all the costs, while the people who sold it to you already made their profit. If you've already fallen into this trap, don't panic. You have options. Assess your current situation honestly. Calculate what you've really invested, including all premiums and costs. Determine what your silver is actually worth if you sold it today. Look at your opportunity cost. What could you have earned if that money was in other investments? Then make a rational decision going forward. Maybe you slowly dollar cost average out of some of your position to rebalance your portfolio. Maybe you hold what you have but stop adding more. Maybe you convert physical silver to more liquid silver investments. Whatever you decide, base it on rational analysis, not emotion, not sunk cost fallacy, and definitely not on hope that the silver promoters are right and it's going to the moon any day now. The bottom line is this: the $52,000 silver trap, or whatever the dollar amount is for you personally, is real. It's been carefully constructed by an industry that profits from retail enthusiasm regardless of whether that enthusiasm is justified. They've created an echo chamber of reinforcing content, built communities that discourage critical thinking, and wrapped it all in a narrative of being smarter than the masses and preparing for financial catastrophe. Don't be the person who wakes up years from now realizing that while you were sitting on a pile of silver waiting for the big payoff, you missed out on real opportunities to build genuine wealth. Be smarter than that. Be more skeptical, be more diversified, and above all, make investment decisions based on rational analysis, not fear and greed. Your future self will thank you. Sonnet 4.5.